What's up, guys? Alex here. Happy Sunday. Hope you've all had a good week and a good weekend. Getting ready for the new week ahead. I'm just going to go over my GU trade breakdown for this week. There was some positions I did take this week. I took a short and a couple of longs. Um, but yeah, today I'm just going to go over. There was two long positions I took, and they seem to have the most intrigue within the channels of why I got in these trades. So I thought it'd make more sense to go over the long positions rather than the short position I took. And so yeah, in terms of like the higher time frame, it's more or less the same as it was in last week's recap, right? Because I mentioned that we were trending bullish. We had this internal structure within the daily high, the daily low, and we were moving sideways for a good amount of time. Of course, multiple trades within this area, 4-hour structure breaks, 15-minute structure breaks, and so on. But eventually, we start reacting to this daily extreme demand. We get this break to the upside here. We come back down. We respect, once again, the extreme demand. And the expectation at this point was to then continue and put in, break this high and potentially break this high and follow the bullish order flow, essentially. But yeah, what happened was we started respecting supply to the left, essentially this supply chain, and this low then failed to do its job. It failed to put in a higher high, and it became a weak low or a targeted low, and eventually just fell through, which is fine. So now the daily at this point I'd switched bearish, right? And so any longs at this point in time would be, the expectation really for longs would just be, okay, we're going to be a pullback in terms of the daily structure. So rather than expecting huge longs from here now to go on and break these highs here, for example, the expectation really would be potential pullback into these sort of levels within premium, and then continue with the bearish structure and break the low essentially. And so if I just go down to the 4-hour quickly, yeah, last week I went over these supply levels, the reasons why I had these levels marked. But just briefly, we're respecting the supply chain here. We come down, we essentially have this 50-minute supply and demand flip zone here, and we have this 4-hour flip zone here. So reaction point to the demand, extreme of reaction leg, and then the failure. So like I did originally have this one as well. And yeah, so we traded higher than this one, which is fine, and we came to this 15-minute flip zone. Which then basically we started reacting from here, and I took a short position, I believe it was around here somewhere, and my first target was of course the weak low, the weak structural low here, and then there was also a potential target that if we were to break this 4-hour demand level and trade lower than this level, there was a potential to hold it for a swing trade, essentially targeting all the way down here. And the reason for that would be, if I go back to the daily order flow is bearish. This low here is failing to take out the highs, basically. It's failing to take out the structural daily highs. We start respecting the supply, and then at this point here, we essentially have supply gaining control of demand. And so once we actually break this level, and we're at this point here, I'm considering this low here to be weak. And so I'm looking at all this area here. I'm looking for the bigger move to be the sell, essentially targeting this weak structural low. Unfortunately for me, my sell was here. I managed to get the majority of my volume off at 20% at this weak low, which is great. And it did actually start respecting this 4-hour demand level and came higher and took the rest of my position out of a break even before then breaking this level kind of as expected. Unfortunately, I wasn't in the sell now, and yeah, so now at this point, like I said, the expectation really would be for this low to go. And so this is what happened at the end of last week. We had this big sell-off, I think it was Friday, huge big sell-off, and coming into the beginning of this week, what we can anticipate really, I mentioned in pretty much all the outlooks this week that I was anticipating a pullback, basically a correction, because yes, we're expecting this low to go here, expecting the big sell, but it's very unlikely that it's going to be just one huge push, right? We're going to get some form of correction, some sort of pullback, and potentially, put in lower lows, lower highs in terms of the internal structure before, taking out this low. And so then it's about, okay, where where are the likely places that we could see some form of pullback from. And so this is why I had this zone marked here. This zone marked here, right? And the reason was basically I like to look for kind of three significant points of interest, right? That I class as high probability zones. And what they are is extremes of structural legs, because they're the last point before basically we have a change in trend. So extremes of structural legs, liquidity poise, so they are essentially sweeping liquidity and then going on to break structure. And finally, it's supply and demand interactions, otherwise known as flip zones, such as this one. And so this is why I had this zone marked. We have basically a daily supply zone, just before the break of this structure. We then have the reaction to this daily supply zone, the extreme of the reaction leg, and then the failure. And so this candle here would be the point of failure for this daily supply zone, right? And so I was basically anticipating some form of pullback from this area, and so not necessarily a huge move to then go on and break all the structural highs, for example, because we've already mentioned that we're bearish, we're reacting from supply within premium of pricing, and then we've broken this structure here. So we already know the higher time frame intention really would be to take this low out. And so I'm expecting longs from here, but I'm not expecting huge longs, like I mentioned, just a pullback. And so we don't necessarily know how big the pullback can be, but we can anticipate there is a pullback, and we can look on the lower time frames and intraday time frames, such as the 15-minute, and see how we develop, because obviously we are going to be heavily counter trend if we are to take longs, so it is always safer just to wait for a bit more confirmation, and I will get into that in a minute and you'll see what I mean. And so if I just go back down to the 4 hour, yeah, like I mentioned, we're basically coming down, and at this point in time here, I was kind of just anticipating this pullback into this sort of area here, potentially all the way up to here, but basically just pulling back at least somewhat. And so in terms of the 4 hour, there wasn't really a lot I was looking at. It was more a case of this daily demand zone, and I kind of wanted to refine it. It was actually a 30-minute refinement, I believe, that made the most sense. Oh. Sorry, 1 minute. Okay, I don't know what's happening there. Okay. It made the most sense to me because usually I do use the 15-minute. I'll just show you the 15-minute in a second. But basically, what I want to see is the last sell candle before the buy, ideally with the buy engulfing the sell candle. And so on the 30-minute, this was a nice clear zone, and it also happened to be a liquidity point as well, right? So it takes liquidity, breaks structure. It's a nice sell to buy. And so this is kind of a refinement within the daily zone. Now, of course, if we start reacting from around these areas without coming into this refined zone and start getting bullish price action from there, that's fine as well. It's just if we do come into here, it just gives you a bit more confidence, right? So I'll go down to the 15. So the 15-minute kind of just have this, this huge window of imbalance. We kind of have this small bullish candle, but it's like I said, I like to see the sell before the buy, if possible. But really, it doesn't matter too much because I'm not going to be setting, for example, a limit order on this. It's more a case of a huge area of interest, kind of a refined area of interest, and I'll be looking on the lower time frames anyway. So either way, whether you had this refined zone or not, the daily demand is what's important here. And so I was just basically monitoring now the 15-minute structure. Seeing how we're coming into these zones, of course, we're still heavily bearish on basically all time frames. The daily's bearish, the 4 hours bearish, the 15 minutes bearish. And so, of course, we can just play the trend. And so I did take a sell from here and basically targeted this low here. And this trade breakdown of the short is actually within the Team Trades channel if you want to check it out. I'm not going to go over it in too much detail in this video, but it is broken down there. And basically all I was doing was just playing the 15-minute order flow, because I'll just draw these on. We have 15-minute low, 15-minute high, and now I know there was some people who were considering this here, for example, to be the 15-minute low, or even if not that, they were considering this to be the 15-minute high, right? And then seeing this as a break of structure, and considering, okay, we're bullish coming off this area. I mean, we didn't actually mitigate it, I don't think, or maybe just about, but essentially it's more about this structure here, right? Some people had this as the 15-minute high, and the reason why this isn't the 15-minute high is because essentially we don't get this body closure below the low here. So this isn't a confirmed lower low. So we don't currently have a new lower low in the market. So this can't be a new lower high, because the lower low comes before the lower high, right? And currently this is still the lower low because this didn't close below. So this is still the lower high. So this can't be the lower high here. Now we do have body closures here. We can say, okay, this area here, or eventually this area here. Okay, now we do have a lower low in the market, and so when we pull back now, as long as we don't break this high, we essentially would have a lower high in the market, which in this case turned out to be here. And so, yes, we do come above these structures here, but we've not switched bullish. We've essentially just collected the liquidity resting above here. In this case, obviously it was equal highs, structural liquidity. We remained within the bearish order flow, but it also did happen to be Asia highs as well. Let me just show you this. Asia highs as well. But either way, even if it wasn't Asia highs, we remained bearish, right? And so in terms of weak structures, like I mentioned on the video from last week, I like to always try and position myself targeting a weak structure. And so in this case, this here would be the lower low, and it's actually failed to break the current structural high, which is here, the highest point before the break. So not here, but here. And so this has failed to take out this area here. And so once in this trade, we can see, okay, this low here would be the weak low. Once we see like the lower time frame, supply taking control of demand and so on. In this short here, we did eventually actually come back, kind of retest my entry, and then eventually followed through and come through this weak low, right? And so we're still bearish at this point in time. And like I said, the idea is to play the pullback. This is my overall trade idea, to play the pullback. But obviously I can't ignore the current trend, but I just want to keep in mind as well, the lower we get in this leg without pulling back at least somewhat significantly, like the less probable the sells will be, because eventually we will have to pull back, we'll have to correct. And so I am very wary of where we're reacting from now. And so same thing as this, right? This is the low, now this is the low here. So we break here. And so the same thing again. This here can't be the lower low because it didn't break with the body closure. And so then this here can't be the lower high because obviously this, like I mentioned here. At this point in time, okay, now we've had this body closure below this low, so here and eventually here. Now any pullback, we can get a confirmed lower high. So at this point in time, this was the low, this was the high. So we have structures within this, of course, like all of these structures here, but it's all just internal structures with the overall swing structures being here, right? And so now we get this pullback here. This point here then goes on to break this now with body closure. So we can say, okay, we've had another lower high in the market. So if I just draw these on, just kind of clean up a little bit. We have the high to the low, this 15-minute leg here, this 15-minute leg here, and for me, I mean, technically you could have this now as lower low and lower high here. That is definitely valid, but for me, I want clear, defined, big swing pivots. Like I want clear structure, clear pivots in the market, rather than kind of pushing up, impulsing, sideways correction, and then impulsing, right? And so either way, whether you have this is the high or this is the high, either way, we can consider ourselves still bearish at this point, right? And so this for me is just one impulse, sideways correction here and an impulse. You can see the difference between this and clean pivot in price, just the way that I map structures basically. And so this here now hides the low once again. 15-minute is still bearish at this point, so I'll just clean this up a little bit. And so we're actually coming into now our daily demand zone, even our refined demand zone, which was, like I said, on the 30-minute. And at this point in time, we're still bearish. So although we're in a daily demand zone, I don't want to just necessarily take, for example, a 1-minute change of character here and expect it to hit the moon, because currently all time frames are bearish, so anything long would be heavily counter trend, even though we are in a daily demand zone. And so what I want to see is more confirmation. I want price to show me that it's going to correct rather than kind of force my bias onto the market saying we're in this level, we need to go long. I want it to show me that it's going to do that. And so what we can see here, we have, I'll just move this a minute. We basically have this change of character here, right? So we don't have a breaking structure. We've not switched necessarily bullish until this structural high goes, or if you had it here, this structural high, right? So let's, for argument's sake, say we had structure here. Either way, it's the same thing. This here, changing character, structural high here or structural high here, depending on how you have it. So we have this changing character. It's the first sign of or first early indication of, okay, price may begin to turn around now. But it's not necessarily, doesn't necessarily have to. We can get breaks to the upside and then continue following through. For example, we could say the same thing here. We have this changing character to the upside here and essentially just followed through this demand. And so what I want to wait and see, especially when heavily counter trend like this, is to wait for something that I call the first level of respect, or you could consider it perhaps a double confirmation. You know, either way, it's the same kind of thing, right? And what I mean by it is, we get the changing character. I don't want to jump in on the very first, jump in after the very first break, the very first kind of mitigation of demand. I want to wait and see the first level of demand being respected and then get in after the next break, if that makes sense. Because of how counter trend we are, I want price to actually show me that it's turning around and not just kind of force the fact, let's jump in on the very first one. Yes, it might work out, but you will take a lot of losses jumping on the very first one as well when counter trend, right? And so we have this change of character. We kind of mitigate this wick here. So we are respecting the low at this point, and then we do get our second break. So we do break, respect, and then break again. So we can say, okay, we are actually now starting to get some bullish signs in the market. We're starting to see the low being respected. We're starting to see supply levels break to the upside. Okay, potentially we could look to get in long now. And so at this point in time here, this is kind of during Asia, we were reacting to essentially this 15-minute wick, this 15-minute liquidity poi. You can see here it takes, move this out of the way. It takes, oh my God. Okay, yeah, it takes liquidity to the left and then breaks structure, right? So this is what I consider to be a liquidity poi. So we're reacting to this level of supply. The expectation in terms of order flow, we can see swing structure wise, if I just draw this back on actually, whether you have it here or here, the expectation really now would be broken to the downside. The expectation would be for this now to continue breaking lows, continue with the bearish order flow like we have done currently so far, bearish all the way down. And so what we get instead is we actually begin to, or continue to, respect this low. So if this is the low in the market, we're still respecting this low. We're not breaking the low, and what we can look for then is lower time frame confirmations in terms of, okay, is demand taking control of supply on the lower time frames? If so, this then would become a weak high or a targeted high. But if supply, remains in control on the lower time frames, perhaps we are just pulling back from this area into a supply level, for example, into a supply level to then continue. And so this then wouldn't be a weak high because supply remained in control in these areas. And so I will just touch on this as well, actually. Like I mentioned, we've had the change of character, we've had the level of respect, we had the second break, and potentially we could look for longs, for example, from this area here. And the reason I wouldn't want to get long at this point is because if you factor in liquidity concepts and think about, okay, the market will need to take some level of liquidity before the move happens, right? So if we're looking to get long, we will need to take some form of sell side liquidity before the move happens, right? So it can happen numerous ways. It can happen with, for example, liquidity poise. It can happen with inducement. Either way, liquidity will need to be taken before the move itself happens. And so, or at least that's the way in terms of my trading plan that I consider it, right? I factor in liquidity quite heavily. But essentially what I'm saying is, if this is the low of the structure, we've broken this structure here, we've reacted to this supply, we have the extreme of the reaction leg being here, and then the failure, right? So this is, we could say this demand here is the point of failure for this structure and this supply here. And so this is essentially a 15-minute demand zone. But what we can see is, you'll see I draw these boxes on, basically just showcasing the fact that there's no structural liquidity within the leg itself. And so we don't have anything, for example, a piece of structure here to sweep to continue. So this would be essentially taking the sell side liquidity below this structure and then getting the move from this demand level. If we don't have that itself, and the zone itself isn't a liquidity poi, for example, like this, here we've taken the buy side liquidity, so we don't necessarily need inducement for this level because we've already taken the liquidity here. In this case, this isn't a liquidity poi. In fact, it's also equal lows. But either way, whether this was a pivot or equal lows, it'd be the same principle, right? We've got nothing to induce here. The zone itself isn't a liquidity poi. We've got nothing to induce to the right either. For example, we don't have an early break just before the zone, enticing people to get in just a little bit early here to then get swept and then get the real break and then get long, for example. This would be inducement to the right. We don't have either of those, so to the left or the right. And so this is why you'll probably see on my charts, I do draw these boxes on. And the expectation would be for this low to fail. In this case, it's a bit more obvious because it's equal lows, but like I say, either way, the expectation will be for this low to fail based on these liquidity concepts, right? And so the low itself fails, we now take the sell side liquidity, but most importantly, we respect this low, we don't break this low. And so this then becomes a weak high. We've failed to break the low, we've taken sell side liquidity, and yeah, like on the lower time frames, supply begins to fail, which I'll show in a second, and then this here becomes a weak high. And so I mentioned on my last video, I want to position myself targeting weak structures. Yeah, so I'll go on to the 1 minute. And so, yeah, there might have been some nice sell-offs during the very early part of London or London Open or around Frankfurt, which is fine because we were in this 15-minute liquidity point, so they were definitely valid and it was pro-trend. But yeah, like I said, we've now, I'll just mention this as well, right, because on the 1 minute, of course, there looks like there is structures before this 15-minute demand zone. Structure here, so that you could say there is something to induce. When I'm looking at a 15-minute zone, for example, this is a 15-minute demand zone, I want 15-minute inducement. And so, same if it was a 4-hour zone, I'd want a 4-hour inducement. If it's a 1 minute zone, of course, I'd want 1 minute inducement. So whichever time frame you're on, for the zone, that's the time frame I'd want the inducement on if the POI itself hasn't already taken liquidity, if that makes sense. And so, like I said, we respect this level here. We've taken the liquidity to the left, and we've pushed back up. We've come down again. Once again, we've still respected the low. So we've respected this low to the left here, and now we've respected this low to the left here. And so it's just giving me bullish signs that, okay, we are beginning to show signs of a pullback from within this daily demand zone. And now it's about, okay, will demand take control of supply? Because of course we're reacting from demand, but we've not really seen any level of supply levels failing just yet. And so if I just mention about 1 minute structure now, so we've got, for example, 1 minute structure like this. The expectation would be for this high here to go on and break this low here in terms of 1 minute expectational order flow. What we get instead is, like I mentioned, we start respecting the level to the left, and so then begin to push to the upside. So this now is a weak, or currently a weak high, a weak level of supply. So it's not a supply I'd want to be selling off, but it's a supply we can mark on to look for interactions, right? We can look to play the interactions and see if demand does take control now. So what we get is we get our reaction to this supply level, and so it's the same thing over and over again in terms of these interactions, right? We have our reaction point, extreme of reaction leg. It's not the very extreme, but the extreme of the reaction leg, and then the failure. So this now is our demand that initially took control of supply. So now we've had basically a change in control of the market in terms of the 1 minute after already respecting this low. And so now I'm considering if this demand level holds this high to be weak, as I mentioned before. And so we begin pushing up to the upside. We start respecting this supply level, which is kind of a flip zone. Once again, before this kind of 1 minute break, we have these buy to sell wicks, reaction point extreme, failure. We've now come into this level. Once again, it's not really a level I want to sell off now because demand has taken control of the market, and this now is weak structures because we failed to break the low. So we're basically just reacting off this supply essentially as a catalyst for a pullback into our demand level. And so we can see here we've built up all of this, these equal lows, more sell side liquidity, inducement. You can see it's just above the zone. It's not miles away, it's just above the zone. And we come into this level and we basically get this 1 minute change of character. This here could have been a very valid and a really good entry. And so the only real reason I didn't take this here is because this is happening during London, right? If you look at the time at the bottom, 10:23 at this point, I don't normally trade London. I only really trade New York. And it just so happened this day I was actually on the charts. I was kind of getting ready to do my outlook for New York, and I was also just within Discord, answering some questions and whatnot. And I was just kind of watching this play out, and I was like, oh my god, it's really clean. I was marking it all up. I wasn't in the trades live at this point. I was marking it all up, and I was thinking, this is just really clean. We've got this week high. We've got all the things I mentioned earlier, and I'm seeing this break play out. I'm seeing this level hold. I'm seeing a push to the upside once again. We react to this level of supply, which is kind of the last point of supply that caused price to trade lower than these structures. So we react to this level, and we've come down again and still respected the low. So we've respected this demand, or first of all this demand, then this demand, now this demand, and then we've broken to the upside once again. And in this case, it's the same thing in terms of flips or interactions as this. So we have reaction point, reaction leg extreme being this wick, and then the failure. And so this is a flip zone. It's also taking liquidity to the left. So we've had liquidity taken here and here. And so then as price was breaking to the upside, I was thinking, you know what, it's too clean to ignore. It lured me in, and I actually took a trade in London, right? So as price pushed up, started coming to the downside. I didn't actually have a limit on. I was just going to mark execute because it was kind of happening quite fast. I think it was around here when I actually decided, okay, I will get involved. So as it started coming down, I saw that it was respecting, and yeah, I didn't get the best fill, to be honest. It was a bit high, but you know, either way, I'd rather just be in the trade as long as I can cover the zone. With GU, I usually use 3 pips. In this case, it was actually 3 pips was, you know, pretty big in terms of this price action, so I got away with less. And so yeah, so I was in this trade now, and like I mentioned, the very first target, I'm not interested in any of these supply zones here because essentially the idea was the fact that this was a weak high, and so I didn't really want to take anything off until, you know, this high fails, right? Because we might react to supply levels to the left, but I wouldn't expect them to then cause price to melt, right? Because, or until at least this high gets either swept or broken first. I mean, if it swept it here, for example, and then we had a shift in power once again and supply took control, then that could happen. But either way, I'm expecting this high to at least be swept or broken before anything else happens, really. So yeah, so I'll just play this on. So go back to the 15-minute. Okay, yeah, so there was some supply levels to the left I was looking at, for example, this one. And at this point in time, we can say, okay, structurally, whether you consider now to be bullish from this break or whether overall we're still bearish because you have it here, either way, I'm following internal structures now, right? And so we've had this break here, we've respected the low, we've taken liquidity, we've now had this break here. And so I'm saying with certainty, whether the high is here or here, demand is in control, right? Demand is in control of the market, and so any supply levels to the left, yes, we may get some reaction, but I'm not expecting them to all of a sudden just push price down like this. On the lower time frames, what I'll look for now is, okay, do we start respecting these levels? And then on the 1 minute, start getting a shift in power in terms of supply regaining control of demand. And then if that happens, then perhaps I can look to take some partials or to, you know, potentially even close the trade and look to start looking for shorts again. But yeah, just basically it's about seeing how we're reacting to these levels. And in this case, we kind of just blow through this one, you know, disregard this one completely. Just delete that a minute. And I'll just play it on one more. Yeah, so we have this, basically what I'd call the extreme of how I was considering the 15-minute leg at the time, right? And so we're reacting to this level of supply. And so, of course, it's definitely valid to be looking for sells from this area now. But the only thing to consider now would be, or for me anyway, how I'm looking at it, would be liquidity concept. So the same principle as this. There was no, in terms of this demand level, the demand level itself isn't a liquidity poi. There's no inducement before the demand level in terms of the time frame of the demand level. In this case, it's a 15-minute demand. There's no 15-minute inducement. There's nothing to the right either. So the expectation would be for this demand to fail, which it did. And so the same thing here, really. This is the 15-minute extreme. So it's a valid supply zone to be looking at. But you can see here, I draw these fancy boxes on. There's no 15-minute inducement. There's nothing, for example, like this, to then sweep this and push price to the downside. So there's nothing to the left. And so then it's a question of, okay, once we start respecting this, do we get anything to the right? Because if we don't, the expectation would be for this high here, or this supply zone, to be used as liquidity itself, and price to essentially either sweep it or break it and continue. Either way, the expectation would be for this supply zone to fail the same exact way this demand failed. And so I'll go down to the 1 minute. So you can see, yes, we're respecting this supply zone here. And we start pushing to the downside, which is fine. But at this point in time, yes, we could argue we have, you know, this change of character. But currently, demand is still heavily in control of the market. We can see every supply we've hit, we're just breaking through. Demand's remaining in control. And so the same thing here, we've hit this supply. Where is the last point of demand? We can say, okay, there's change of character, which is fine. We've not taken liquidity to the left. We've not taken liquidity here either. So far, we've not taken the buy-side liquidity we need in order to look for sells. So we can see we just start pushing down to the downside. And we continue to respect demand. So yes, we've reacted off this supply, but we're still respecting demand at this point. Same as here, same as here. We're respecting this supply for the time being, but all we're doing is coming down to mitigate demand to then fail. And at this point in time, the same thing could happen here. So if I just play price on a bit more, you see, okay, demand is still holding. And so we can say we've still not taken liquidity to the left or the right. And for example, you might have had, I think there was someone who had this as liquidity and took a sell off this basically. And with structural liquidity, I've mentioned it numerous times, where I want structural liquidity to break something. It needs to break something. So for example, this high here, for me, wouldn't be structural liquidity because it's not broken anything. It's just pulled back and then pushed up. Whereas, I'll mention it again. So if we have, for example, something like this, we've broken structure. People now are enticed to get in here because people typically, especially trading the way we do, they wait for the break of structure and they get in on the supply that caused the break, for example. And so this would be a typical kind of entry signal to look for sells from here. But what happens is we've not taken liquidity to the left or the right, so then this here becomes structural liquidity. So yes, it looks nice, but essentially we're just getting in just a little bit early, sweep this, and then get the real move. And it's because they're getting enticed just a little bit early and then getting swept. And it's, I'm not saying people in our community or necessarily, I'm just saying in general, this is the way structural liquidity can be considered, right? Structure that breaks something. And so at this point in time here, none of this has broken anything. We can say this has, because it broke this to the left, but anything else, really, we've not broken this. For example, this low held. So let's say, for argument's sake, this could be structural liquidity. And like I mentioned, there was nothing to the left on the 15. This can be structural liquidity because it's broken this. If I just zoom back out. This structural high itself can be used as liquidity. It's broken structure. On the 1 minute, this high can be used as structural liquidity because it's broken structure. So either way, this supply it's not a good supply to be selling off now because demand is holding. We need to take buy-side liquidity. In this case, this is what we do. We sweep the high and then push to the downside. Another way you can consider it is we have nothing internal to take, so we'll have to take the external. That's another way to kind of simplify the explanation, right? And so we've now had this FU candle. If I just go back to the 15. So I'm kind of jumping around a little bit, but yeah, nothing internal. So we have to take the external. We have to take the high itself. And this is exactly what we do. We can see demand was in control. We react to supply while demand is in control. What are we doing? We're building liquidity. We sweep this liquidity with this huge 50-minute FU wick. This huge sweep of liquidity. This 50-minute candle or wick is essentially what swept liquidity and then began to push to the downside. So I've highlighted it in orange. And then within that, we can see what was the last point of demand that caused price to trade higher than this structure here. We can say this, we have this wick here, we kind of have this huge push, imbalance, maybe argue on the seconds there'll be something here, but basically we have this reasonable size wick, we react to this demand, same principle always, no matter what size it is, it's always the same principle of reaction point, extreme of reaction leg, failure. So this here would be a valid entry, right? Because essentially we've swept liquidity now, and then we've had supply regain control of demand. So this here, I didn't take this, but it was definitely a valid entry. And so as price begins to push down, this I should mention, this is actually where I took some partials because I saw the shift in order flow, like supply, taking control of demand. So I did take some partials here. I think it was about 16 or 17% is running. Yeah, I think it's about 17 point something. Where I took some partials, right? I paid myself because we are seeing this shift, we are seeing the sweep to the upside. At this point in time, it could actually do this. It could continue doing this now because with structure the way I had it, we're reacting to the extreme. We've now taken the buy side liquidity. We've had the shift in lower time frame order flow. This now could actually continue and take out these lows from here. So I wanted to make sure I paid myself at this point. In terms of the overall target, I wanted to leave some on because of the potential of where we're reacting from. This pullback, I don't know how big it's going to be. It could come into these prices or these prices before then continuing to the downside. So the potential for the pullback was, pretty significant in terms of the size. So I wanted to leave some on, right? Go back to the 1 minute. So I'll just play price on. Kind of just put in lower lows, lower highs on the 1 minute. And then this now here, I didn't initially have this marked on, but once I was just basically looking at price to see what are we reacting from, right? And I saw this, did the same thing here. We sort of had this bit of momentum to the upside, didn't really react to anything in this case. In this case, we have come down. I just kind of look to the left, see what are we actually reacting from here. And I can see, okay, the extreme of this initial weak high, we have a reaction to it. And essentially we have the extreme of reaction leg would be down here. So yes, we're not reacting to the extreme of the reaction leg, but we are kind of reacting to, the overall buy to sell zone, or sell to buy zone, sorry, and, pushing to the upside. And so last point of supply that's caused price to trade lower than the current structural low, which was here, was, this huge wick. And so I can see as price is pushing up, potentially some buy opportunities here. I didn't take anything else just yet. And you can see now, okay, we're reacting, we're breaking supply levels once again. We've had 1 minute break of structure. And now I can consider, okay, in terms of 15-minute structure, we have this level of this high here. It's failed to break the low. You can see we have this huge push. This high has failed to break the low. We've then had a shift in lower time frame order flow. This now here would be a weak high. Same exact principle as this, right? This structure here didn't take out this structural low here. We then had a shift in lower time frame order flow here, and this became the weak high. Same exact thing. And you'll see it across pretty much all my videos. I've done 3 videos so far, and every single one always targeting weak structure. And you'll see it going forward as well. It's always the same. Yeah, so if I go back to the 1 minute. And so now I'm looking at basically where are the significant points of interest. So I've mentioned it a few times about extremes, flip zones, or liquidity poise. We don't have anything of those descriptions along this point. We do have a flip zone here where supply initially regained control of demand. which is also within the 15-minute FU candle. So you can argue as well this one, just below it, because we did react to this extreme failure kind of thing. But the reason I preferred this one was because it was within the 50-minute FU, and it was because it was the initial switch, the initial change, and also we didn't quite don't think we quite mitigated it. Okay, maybe we did. But yeah, this is the zone I had. I put it in the GU chat kind of when price was around here. So before this happened, I kind of forecasted this as a zone, not to sell off because it's a weak high, but kind of a zone to look for flip interaction once again, because I'm always looking for the interactions. And so as price played on, we have the same principle here. We have the reaction to this supply, extreme of reaction leg with this inside bar. Don't know if you can see it. With this inside bar, also acting as a liquidity point. So we've taken the sell side liquidity. It's also a flip zone once that fails. And so now this is my demand of interest. This is where I'm considering to be looking for trades long. And now, of course, we can react to supply levels, but I'm looking at who's in control of the market. Currently, it's demand. And so we begin to react off this level here. And so I know in the GU chat we were kind of joking around with, we're kind of sweeping the sweep of the sweep, right? This is the sweep. This is, you know, the first sweep of this supply from earlier. And now we're kind of joking around saying, okay, we're sweeping the sweep of the sweep or whatever. So we're sweeping this now, reacting to this supply. But this doesn't necessarily mean now all of a sudden I want to get short. Same way I didn't automatically want to get short when we reacted to this supply. I want to see the shift in who's in control first. I want to see the first level of respect, essentially. The same way down here. Same way down here, we had this, 15-minute change of character. I wanted to see the level of respect. I wanted to see the low being respected first. Because of the bearish momentum we had, I wanted to see the level of respect first and then look for trades. So it's the same thing now. Now we're bullish. We're kind of pushing up heavily bullish with demand in control. Same principle. If I'm looking to sell now, I want to see this high getting respected first. I want to see it getting respected and then getting in after the second break and then looking for sells kind of thing. So it's, double confirmation, first level of respect, what I want to see. Currently demand's in control. We can expect supply to be mitigated while demand's in control just to build further liquidity for higher prices. And so people who did take the sell, it's valid sell for sure. It's just the very first sell, and it's just a bit too aggressive for how I personally like to trade. I like to wait for the first level respected, right? And so then the first level did get respected. Oh, sorry, I should mention, I did have this order on the second that this broke. And yes, we didn't have any inducement. It doesn't matter because it's a liquidity point. We've taken the sell side liquidity here. So the liquidity is already taken. We don't need further inducement. Obviously, if we get it, it's a nice confluence, but we don't need it because we've already gathered liquidity before the move itself. And so this now would be my entry. This was my entry. Like I said, I usually use 3 pip stops on GU. This was an exception because of how small the price action was. In this case, it did wick, and it did come pretty close to my stop. Then it carried on pushing up. We did then get the first level of respect of this supply, but then this is now where it's key, right? This is why I like to wait for the first level, because yes, we've respected this level, but we've not now continued and broken. Because if we did that, then I'd be looking for shorts. Obviously, I'd be out of the long, so I've hit my stop loss, and I'd be looking for shorts now, if that was the case. But what we get instead is we fail to breach the low. This here fails to take out the low. It begins to respect to the left. Begins to respect to the left. We come back up. yes, we're respecting the high again, so we're still respecting the high, but we're still, just play this on, we're still respecting the low as well. So this was kind of just before FOMC come out, so you can see what it's doing. It's just building liquidity before a huge news announcement, and we can kind of see currently demand is still in control, right? So I'm considering demand still in control of the market based on the fact that this level held, or this level still in control, still in this trade, sorry. And so, yes, we're respecting the supply levels, but they're also failing to breach the low. So we have this supply chain, but they're weak structural highs. So they're weak highs because they're failing to break the low. We could also say, okay, but are these weak lows because they're failing to break the high? And yes, they are. So we've got liquidity being built to the upside. So we've got buy side liquidity here. And we've also got sell side liquidity below all these mitigations here. So if I just draw it on, that's the wrong thing, but so we've got all this liquidity being built to the downside as well. And so this can often happen, especially before a news announcement, because we're essentially building all the liquidity, and then you'll see a huge spike or huge push in price when the announcement happens. And in this case, we're building liquidity above and below. We don't necessarily know exactly which one's going to go first. But what we can do is just see. And in this case, I was in this long, so I was kind of had my long bias. Yeah, so we take the buy side liquidity out first, and then what happens is we build liquidity for later also. So we take out the buy side liquidity, and in doing so, we actually also build equal highs, so even more liquidity for later. For there's more buy side liquidity above here that we can use as cause for higher prices, or liquidity to target later. And so now we've taken this out. What we end up doing now is news announcement comes out eventually there. Now we take the sell side liquidity out. So we've taken the buy, we've taken the sell, and we had this then left for later. Notice how we didn't have anything really left for later to the downside. And so in this case, we basically pushed to the upside. This huge surge in price from the FOMC news. This is actually where I pretty much got literally more or less all of my position out. The reason was where we had the initial kind of 15-minute supply and demand interaction was here. We had this level of demand. We had this reaction point, reaction leg extreme with this wick. I'll just drag this out. And you can notice how these levels of structure, they just don't mitigate this. They're kind of hovering below. And just nice mitigations, nice level of inducement for this level. So I was kind of anticipating potential reactions from this level to then maybe get a pullback or potentially even drop. Just some form of significant reaction from this level. And so I wanted to make sure I got pretty much the majority of my positions off at this level. But yeah, what happened then is we kind of just wicked around. I was taking, obviously I got majority off, around 8% of this. I think it was 28 of this. And then wicked me out of this one. I still had some volume, only a little bit of volume left, but I still had some volume in the first position. And yeah, essentially we then completed the pullback, and I'll just go back to the 4 hour. Basically the expectation finished. I mean, we never knew exactly how big the pullback was going to be from this zone, but kind of the forecast or outlook or what I was anticipating, did happen, and we reacted to this daily demand zone. We got our pullback, and then we got our follow through. Unfortunately, I didn't catch this sell. I think Brian did. I know Brian did. It's amazing trade. But yeah, so we followed through with the expectation really, because we know the 4 hour and the daily are bearish after this level, and we know that this level here is a weak low. and so it's no surprise we do get this follow through. But yeah, like I said, the reactions from this level were just going to be a short-term pullback, and yeah, hopefully the explanations were clear of why I got in those levels. So yeah, hopefully they made sense basically. Yeah, so basically any questions you have. I mean, I have done an annotated breakdown as well within the team trades, but I thought, kind of a video explanation is a lot better and a lot more easier to follow, I guess. But yeah, any questions, just message me on Discord. Um, and yeah, so I hope you enjoy it, and I hope you're ready for the new week, and let's smash it. Take care, guys. Bye.